Okay, good afternoon, everybody. Welcome to the weekly take on the market. Today is Friday, June 23rd, 2023. This will be your weekly take. I think I already mentioned that. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. I'm not licensed. We don't provide buy, sell, hold ideas here at Investors Business Daily. Take a moment to look at this. Okay. All right. We'll do the same market thoughts, stocks to watch, a lot of stocks that are of interest that I think are, market tells as well. And then the industry groups and then the quote of the week. So you guys know the drill. Do I have? Oh, yeah, I do have a slide. So I found this very interesting. So SoftBank is a giant, I don't know what you'd call it, a conglomerate in Japan. And they've been famous or infamous for, really large bets, sometimes good, sometimes bad. And this was, I noticed this came across my Twitter feed, I think, or I don't know how I found it, but on June 20th, they maybe had an investor day or something, and they decided that they were going to shift from defense mode to offense mode. And they've been in defense mode on, big tech related investments. And this is kind of how the markets work. It's sentiment moves price. Or price moves sentiment. In other words, as the price gets higher, sentiment improves, and as the price gets lower, sentiment contracts. So here's where they turned defensive on May 12th of 2022. So they had a record $16 billion loss. They were underwater on a lot of their tech investments, and they turned defensive. So here's a screenshot of the NASDAQ. I took this a few days ago. So they got defensive there on the left side. And that was, May 22nd, May 12th of 2022. And, the market made another low, rallied, made another low, and took a while, but it built this big rounding bottom. So they're not going to call the low exactly, but in hindsight, for a big, gigantic company like this that has to move a lot of money, it's not a great place to get defensive. That's where they should have been getting defensive on the way up, but nobody ever does that. Not in the big money circles. They just don't have that freedom to move around like we do. So now they've gotten offensive, and I don't know if it'll look the same as the defensive. In other words, it'll slosh around up here and then head lower. But it just shows you how sentiment works, and how you can't really look at what people are saying to make investment decisions. You'd be really disappointed. So if you got defensive there, you've missed the entire rally. If you get offensive here, I don't know. I think it's going to be tough sledding for a number of weeks to months. I don't know. It seems like that. It's, we've had a huge rally off the lows, and a lot of stocks that they would probably be buying, like Nvidia, have made big moves, and they've probably missed a lot of that. So let's jump to the indexes. So, and I'm going to turn my camera off because I don't want to cover the charts. So here's the NASDAQ. And I think it was a rebalancing today. I asked one of my colleagues kind of why the volume was so big. But you had probably another distribution day. Yeah, we were down 1%. And I know I talked about that kind of trend line that so far has held. And my NASDAQ short is working. When you're shorting the NASDAQ, you can get size if you want. You don't have to, you're not going to get bought out or anything like that. But I am losing a little bit on the Nvidias of the world. So net it's done okay. I'm not sorry that I got short, at least so far. We'll see what I'm still short. So we still have to play this out. So I think the NASDAQ is tired. I think it's this is going to be some type of consolidation. So to me, the best case scenario is a consolidation if you're bullish. The worst case, if you're bullish, is this is like some kind of intermediate top where, you know, it comes down here and then the sell signals start going off. And that hurts when you know, it could have been selling up there. I guess if I have to bucket them, I think this consolidation is like a 70% probability. Just a move lower, lot lower is like probably a 20% probability. And I put as like a, you know, another jam back up as a 10% probability, right or wrong. So, but I have scenarios to protect me in that 10% 10% probability bucket if that's what happens. The other probabilities, one, you know, I make a tiny bit, the other I make a lot, and in this case I would give back some of the gains if that were to happen. The jury's still out on the NASDAQ, but extended. I think you want to batten down the hatches a little bit with the NVIDIAs, the Teslas of the world. You know what you own, know the position size you have a certain level of comfort with that position size and the names that you own, and you know, do the math. If there's a, you know, if they all pull back 10-15%, can I withstand that? If I'm 100% invested, you're going to go down 15% off the highs. If you're 50% invested, you're going to go down 8.5% off the highs of your account value, I'm thinking. So, and play those out and think about how, you know, how you can, you know, survive that type of scenario. The S&P, it's a very bifurcated market. Like the Russells had a lousy week this week, and we'll pull that up. So here's the S&P. You know, not as good as the NASDAQ, but it's okay. There's nothing terribly wrong with this picture. The Russell, let's pull up the IWM. So it's gone down 1, 2, 3, 4, 5, 6. What's that? 6 of 7 days off that little mini high, and just not acting good. Today it was down 1.5%, and I think the Russell, I would guess, I should have looked this up, but I would guess it's probably flat to down tiny bit on the year. Well, why don't we do the math? Let's just put it at 180. And where was it on January 1st of 177, 175, somewhere in there. So it's up a little bit still. I take that back on the year, but just way underperforming the other markets. So I don't know. It's a tough market for sure. There's places to be invested, but it's not easy. You know, and the problem is a lot of those places to be invested are way extended and there aren't any proper buy points. And, you know, you start reaching if you get anxious. You start manufacturing buy points, you start making stuff up in your head. I've been there before, believe me. How about overseas? Let's go to Japan, HEWJ. So a bit of a pullback, but it's been a really good run. VPL, not that good. You know, it didn't hold the breakout. That's a little disappointing, that action. Let's look at the weekly. Yeah. Now, that's a pretty good gap. I wonder if there was some type of dividend or something, possibly. Let's hope. But otherwise, not that great. And China is just kind of, you know, what used to be something we watched very closely, the Babas of the world and JD and Tencent. These are all everybody's radar 4 or 5 years ago. We've kind of given up on looking at them. I don't hear a lot about the Chinese market much. I think last night the market, the NASDAQ futures were up. It was, you know, yesterday the market tried to rally. And yesterday it tried to rally. It was up 1%, closed right on the highs. And because I am short the futures, I watch them, and last night they just kind of bled to death. And then I saw on Twitter that the Hang Seng tech index was down like 3% last night. So it's just a struggle over there. I have no idea what BABA looks like. I haven't looked at that in forever. JD. How about Pinduoduo? They just don't look good. They're just not on my radar anymore. They just totally moved on from that. So that kind of weakness maybe is what's hurting our market a little bit. So that's NASDAQ, S&P. Anything else how about the bond market? So the bond market is very interesting to me. It's gotten really quiet and it's not on anybody's radar, but here's like the zeros, which is the 25+ year coupon, which are really sensitive to interest rates because you're not getting a monthly payment or a quarterly payment. You buy a zero at say 2,500 and 20 years from now, they give you 10 grand or something like that. These are things people use for like college or retirement because you don't need the money now. And so I don't know, I'm not an expert on it, but I think they're a little bit more sensitive both ways to, interest rates and inflation. So you've got this declining line and it's gotten real quiet in here. And I'd be curious to see how it plays out as far as if it can break out of this like little range here like that. I think bonds might be a buy finally. They've been in a bear market for a long time. And if bonds are a buy, I don't know what that means for the stock market. I think it means the market goes lower, but that doesn't necessarily mean that. Let me see here. Am I doing this right? TLT. I want to see. Yeah. Look, so TLT peaked at 180. It's been in a pretty nasty bear market for a while. 180 down to 103 that's a really big move for a bond ETF. All right. I think that's it for, yeah. So let's jump to industry groups. And we've got alphabetical order. So let me resort this. Computer hardware, that's SMCI, computer software education, maybe like Duolingo. Computer software database, it's number 3. Internet content, computer software enterprise. So I like the makeup of the industry groups. I have to admit, I think there's a lot of possibilities in here. Telecom, satellites, semiconductors, auto manufacturers. I get the only thing that's been tempting to me from like the Chinese standpoint, like Li Auto or Boyd, if I was forced to buy something in that regard. Those looks interesting to me. I wonder if like MongoDB is probably a database stock. Let me pull it. Yeah. So this has been the best kind of software stock in the most recent time periods. That looks very interesting. So the industry group makeup, I have to admit, I like it. I think it's fun. I like the diversity of it. I like the growthiness of it. So maybe it's just a matter of time, just waiting out this kind of lull, this summer lull in the market. Seasonal, I talked about the seasonality last week. So maybe it's just a matter of waiting that out. I don't know. I'll know in 2 or 3 weeks. All right, so stocks to watch. Which way should we start? So let's start with so I think there are areas that are acting well, like IoT is acting okay. Oops, do I have the wrong day? Yeah, I need to refresh this because I knew this was down. So I've got this little trend line drawn here. I don't know if I would buy it off of that. The longer it goes like this, the more likely is I would buy it off of that. I almost bought it yesterday. I was tempted to buy it yesterday. I just feel like it's a little too soon off the highs. And luckily I did not buy it, because then I would have been stopped today. So this is high on my radar as far as leadership. MDB, it's just too short. You're welcome to try that. These work in bull markets. And so it's possible something like that would work. I don't know. I'm skeptical that it would work. I want to buy MDB, but I'm also, it's very skeptical of that type of short-term pivot. NVIDIA, obviously huge leader. It needs time. I think that's the best case scenario for NVIDIA. It just needs some kind of time. And ideally in a perfect world, and I own a tiny bit, like a tiny bit, just because I don't want to get out completely. Normally I would be out of NVIDIA. I think it would be an out. And sometimes I get that right, and sometimes I get it wrong and they run without me. And so I'm trying to give this one a little bit more room. I honestly feel like it's going lower, but I have a position that, I'm short the NASDAQ. And so if it goes lower, it won't bother me at all. I'll probably do better if it does go lower, and then I'll get a chance to get more aggressive. I really want to get more aggressive, something like that, and get a real position size. I don't know if I'm going to get that, but get back to a real big position on something like that. Or ideally, you just get a bad day in the market. So it's going here and you get boom, boom, that type of shakeout. It's down 20 because the Fed said something, and the next morning it gaps down 8. I would be all over something like that. I think the risk reward would be highly skewed. I might lose, but I'll definitely be a buyer or something like that if that were to happen. I don't know. I'm just trying to game plan so that I'm not shell shocked when it does, or if it were to happen. And if it just keeps trending up without me, or I have a small position, then I have a small position. I think the probabilities, if are 80% lower, 20% higher, or let's say 70% lower. And I'm not talking about 100 points lower. I just mean lower. 10% probability it goes nowhere for a number of weeks, and then 20% that it keeps going up and up and up. That I think that's low probability, but not a zero. AMD, my pair trade, I probably wish I'd put that on. So I don't know. I don't like the action in AMD. This stock is not acting good. I think it's an avoid for sure at the best. NVIDIA is acting so much better. Tesla. So there's nothing wrong with Tesla. It's made a big move. That doesn't mean it has to go down. It just means you should be prepared for that. It looks a tiny bit tired. You could see like the Tesla Q, which is what I used to participate on the short side last year. Was it last year, 2022? You waterfalls down, and you get like kind of a hammer low on the weekly. So that's a possibility. I did buy Tesla Q today. I don't love it. I've tried it a couple of times and have not made money. Obviously, I've tried shorting Tesla a few times with very small size, because I realize that it's not. I'm trying to get in there and get some feedback if it's going to go lower, and the feedback has been obviously every time, you're wrong, Scott, almost immediately. But the last couple of days has not been the case. I want to look at Tesla. So I did short this here that day, and it did open lower, and I covered just because that's what I do. I did not expect it to rally all the way back like it did. It was a downgrade. But then today, down another 8. So maybe, and this is going to be a big barometer on the market. So you should be watching Tesla. I would guess that 95% of you either have a position in it or are watching it. Kind of off the radar, but very interesting. Grupo, this is a Argentinian bank. that's a really strong breakout. Like how much is that? Let me turn the pattern rec on. It's up, well, it's up 18%, but it topped at 26%. I do own this one. So that's very, very strong. YPF, which I do not own, unfortunately. I have tried this before. I tried it right there and got stopped like immediately the very next day. See, this is what I mean. This is a good lesson. Let's jump to that. So I remember exactly the day I bought it. 3.6. So I bought it right there that day. And see how short this space is? It's like, it's 33 days long. How many, it's super short. But the RS line was new high, and oil and gas were stocks that I was interested in at the time. It still kind of am, but they've slowed down quite a bit for sure. But I'll buy that. And that's a bull market pivot. In other words, it works in a bull market. Like when things are just going gangbuster, that type of pivot works, and it'll just boom, it'll go. Kind of like this. Not a great pivot, but bull market pivot. But the next day, gave back all the gains and then some, and I got to be out. I'm out. So I got stopped the very next day. And I think it went lower. Yeah, it went a lot lower. So I was glad to be out, but then it kind of fell off my radar. This is why you can't kind of give up on them. And then this breakout worked. It's up 13% in 6 days. So see how much longer that breakout is? This one is, I want the hover. 103 days. So it's more than triple the length of what I was buying previously. And that's kind of the same thing with that MDB and IoT. When you buy those short pivots, they just don't have the same probability of working, I don't think, based on my experience. They'll work, but your hit rate's going to be a lot lower in something like that. So this is interesting to me. It's, it might not be for everybody. Obviously, I get it. It's Argentina. What do I know about Argentina? Very little. I could barely show you where it is on a map. I do know they have kind of an inflation problem and have had for years and years. And maybe the market thinks they've kicked that problem. I think about like, what would I be buying if I was in Argentina, or what would I be buying if I was trading in China or something? And so I've never been afraid to buy stocks in other parts of the country. As long as they trade on a US exchange, I feel, somewhat okay with it. So, and sometimes I've done really well on them, and there's been some swings and misses for sure, but I've had some pretty good gains in foreign stock. PetroChina was one of the biggest gains I've ever had in a stock, and that was in 2003-ish, 4. Chinese stock coming out of a base, oil and gas. Buffett had a position, had a 5% yield. I mean, to me, it was like a slam dunk. And so I'm not afraid of these as long as I, can have a stop. I might position size a little bit less because, it is a little different, and you can wake up one day and there's political risk or something like that, and your stop's going to be a lot wider than you hoped. That's for sure. The AI, I think the AI thing is losing its steam already. It's kind of this is why you traffic in the best of the best. I think you just want to kind of focus on NVIDIA. NVIDIA is not going to triple, which is why AI is tempting, because it goes up a lot more than NVIDIA does. I just think from a institutional quality perspective, you're better off in those. So this looks pretty broken. And this is another one that was on my radar, another small pivot. Again, I had that trend line drawn. I almost bought it that day. It closed poorly, and I was glad I didn't. And then this morning, I can't remember what happened. There was some kind of news, and I was like, oh man, I wish I'd bought that, of course. And then look at that reversal today. So this is what the, for lack of a better term, the Reddit day traders and the fast money guys, and I have friends that trade this way, and I used to trade this way many moons ago. They traffic and look for these kinds of stocks, and if they're doing that to them, they kind of lose their enthusiasm for buying stocks. So I don't know. It's a bit of a tell to me on how these stocks acted today and the last couple of days for sure for C3 AI. VRT, I don't know if I've ever been in the stock. Now I haven't been in it all 1, 2, 3, 4, 5. I think I calculated 10 weeks. I don't think I've ever been in a stock that's like 10 weeks in a row, and I have not been in it for all 10 weeks. I think I'm working on week 4, but it's just acting really good. It just doesn't want to go down. It's very very strange, really strong action. I'm hoping there's something going on that the market knows something that I don't, and it's gonna really start to push. But acting very good, and this is one I own. I'm trying to hold on to, with the small NVIDIA position. I think SMCI is probably one we should look at too. So 20% off its high. So this is probably going to be the left side, maybe of a base. Still so far away from the 10-week moving average of 180. So I think maybe a week or two, you'll get some kind of chance. I think I'm going to. I don't know for sure, but I'm got like a 90%. If it gets to that, I'm going to be a buyer. I think the risk reward is too great to not buy it if it does that, but we'll see. We'll have to wait and see if it can get there. I think that's it for stocks. Looking on my screen, is there anything else that I wanted to discuss? No. Okay, so let's jump to the quote of the week. From Terry Smith. He wrote the book, Investing for Growth. He is, I think you'd call him a value manager, and I'm pretty certain I've read the book. It's been a while, but I'm 99% certain he's in the UK, he's overseas. But somebody tweeted this, and I liked it a lot. Searching for investment strategy or fund manager who can outperform the market in all reporting periods and varying market conditions is as pointless as trying to find a rider who can win every stage of the Tour de France. I'm going to guess that no one has ever won every stage to win the Tour. They just excel in certain areas so much that they can be, just pretty good in other areas and end up the winner of the Tour. I would bet, I'm sure of it. I'm not a bike rider. I'm sure of it. Somebody's won the Tour and never won a stage. I would think that has to be the case. I hope I'm right since I said that out loud. But this is precisely what many investors do. There's a lot of evidence to suggest where investors are switching between funds and changing investment strategies, their timing is almost invariably wrong. And even the professionals do this. There's a famous, well, it's relatively new, but the reason I know this story is my wife's a school teacher, and she's part of the California, teachers pension, which is one of the largest pensions in the world as far as AUM, assets under management. And they moved out of Universa right before the pandemic, the COVID pandemic, the break in the market then, when Universa, which is run by Mark Spitznagel and Nassim Taleb, the author of The Black Swan, is kind of made famous, where they buy, and I'm going to simplify a little bit, they just buy, cheap options, cheap puts, and they lose, and then they win massively because they're buying insurance, so to speak. So they might buy index puts way out of the money that it almost always expire worthless. But if they don't, if you get a COVID-like break in the market, they make a bloody fortune. And California Teachers Pension owned some of this. They had this as kind of a hedge, and they got tired of the bleeding of losing 3% a year here and there, and they got out right when they needed it the most. It would have been a huge windfall for them and protected their downside in their other areas. So they're all guilty of it, of switching at the wrong times. And I think as an individual investor, the message here is that, you have to have a strategy, and your strategy is not always going to beat the market. One of the common questions we get in emails from people who are new, like, what's the track record of MarketSmith? Well, there's no track record. It's it's a research tool. You have to decide how to take the ideas. Well, can I expect to beat the market every year with MarketSmith? Well, my answer is probably no, and you probably don't want to try to do that because you're going to blow up one time trying to do that. So you don't have to beat the market every year to do really, really well. I track my performance very closely, and I don't beat the market every year. In fact, and I'm talking about my cash accounts, they're the easiest way to track because no money, my IRAs, my Roths, I don't put any money in anymore. It's not worth it. It doesn't move the needle. Or and I can't take any money out. So it's real simple. It went from X to Y. How much did I make that year? What percentage? So 30 years, the market beats me. And in the NASDAQ, I think I'm in line with the S&P, but the NASDAQ is, beating the pants off of me this year. And that's fine because last year I had a positive year in the market, and the NASDAQ got torched. So that's where the outperformance will come from. Or even if it does really well, like the COVID year, I think I had more than a triple what the NASDAQ did. But there are years that the market beats me, and that's fine. I don't have to beat the market every year. It's not really I think it's not a strategy you want. I think you put too much pressure on yourself, and you'll subject yourself to potential blow up. So you're on the Tour de France. And you're good at the Alpine, or you're good at the downhill, or you're good at the straightaway. And when you're seeing the ball, and when the market is like in your sweet spot, you want to go for broke. You want to hit a home run. So like the COVID 2020 bull market was like a sweet spot for our style. I know a lot of guys made 300-400%, and I made over 100% in a cash account that year, and that wasn't all that great considering what some other people did, but that's fine. I'll live with it. I wish I could underperform that poorly all the time. So, but then there are years where, if you're not good at the Alpine and it's an Alpine stage that day, then you just do your best, you survive, and you get ready for the straightaway, which is 3 days later. And see, I hope that analogy makes sense. I think it does. So find a strategy that works for you, get comfortable with it, but know that it's not going to win all the time. But it's in certain periods, it's going to really do really well. And in those other periods, that strategy should underperform, but survive, or maybe even a little bit better. Maybe it just outperforms a tiny bit. So when the NASDAQ was down last year, I don't expect to make 30% in my cash accounts. I can't short. They've got these new products like the Tesla Q, but what am I going to do? Put my whole account in that? No, thank you. So, just to make a little bit in a year where the market went down is huge win. It's the alpha is huge in something like that. So that's the message from this. And the book is Investing for Growth. Terry Smith is the author, if you're interested. It's been a while since I read it, but I feel like I enjoyed it. I thought it was a good book, even though his strategy is a little different than mine. Okay. Contact information, marketsmith@investors.com, 800-424-9033. I will be on vacation next week, so I do not anticipate a video on Friday of next week unless something really drastic happens. I'll figure out a way to do the video, but if the market's just like this, I'm going to take next week off. Have a great weekend, everybody. Thank you. Bye-bye.